Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to review FuelCell Energy, give an overview of the company, some fundamentals, see what other analysts have said on the company, and give it my buy, hold, or sell recommendation. So let's get right into it. So FuelCell Energy manufactures stationary fuel cell power plants for distributed power generation that typically use natural gas or biofuels. It operates and maintains these fuel cells, and its major customers are utilities. So a little different than Plug Power that we reviewed yesterday. Now for utilities, the fuel cells help generate clean energy and can be used when there is an increased power demand, carbon capture, and long-term energy storage. The company has a large total addressable market as utilities are beginning to adopt distributed generation solutions, carbon capture, and hydrogen-based energy storage solutions. Currently has about $1.3 billion in backlog of projects and is currently working on 50 megawatts worth of projects. Analysts believe that the global market for these products are about $170 billion. So there's definitely lots of potential for growth for fuel cell energy over the next couple years. So let's go ahead and look at some fundamentals. Let's look at some recent developments. For most of the year, FuelCell Energy stock has been trading between $1.50 and $3 a share, although it did fall to $1 during the coronavirus crash back in March. However, recently, the stock has had a 35% rally as it was initially upgraded by JP Morgan after it said that FuelCell Energy valuation is attractive compared to its peers, and the stock should become profitable within the next couple years. And currently, it's not. FuelCell Energy added to these gains when it was selected by the Department of Energy for an $8 million grant to develop a electrolysis platform for producing hydrogen. And in the last quarter, it slightly topped expectations with revenue of about $18.8 million versus a $16.6 million consensus. Earnings definitely were below expectations, though, with a loss of 7 cents per share, while analysts were expecting a loss of 6 cents per share. Now, while those buying on this fuel cell energy, we're basically, as you can see in this chart, we're betting on a turnaround. So let's go ahead and look at the valuation. Fuel cell energy is definitely not profitable. So as you can see here over historical for the revenue over the past few years, it's definitely been on the decline from 2015 to present. And one caveat is that the company's revenue is basically bumpy to its making large sales to utilities. So it's definitely going to be ups and downs with its revenue because there's specific projects they're working with. Next year, though, it expects increased earnings by about 80% and average 15% earnings growth annually over the next 5 years. With their net income, they've definitely been negative, and that's why we've seen $1 to $3 a share basically over the past couple years. They're betting on future results. That's why the stock price is was at its all-time high. And basically they've been increasing. I mean, they have negative cash flow, and they've been increasing their financing to cover their negative cash flow position, so they stay afloat basically. So let's look over here. So recently, over the past 3 quarters, their revenue targets, they've hit their revenue targets right here. So they've been doing pretty good on revenue, and but they're still unprofitable right now, as you can see here with the total operating income and the net operating income and the valuation. So let's look at the profitability and analysis. Losing money on a gross basis, fuel cell has poor profitability characteristics in comparison to the electrical equipment and industry peers. While the operating and net margins are below the medians, its gross margins is among the lowest in the industry. So this is all a bet right now. So let's go look at over the fundamentals with the analyst reports. Let's see what the other analysts have said and see if I agree with them. So right now, they did a target from December 31st, 2020. The analysts have a price projection of $11 to $5 with a hold. 3 is saying hold, 1 sell. We'll go look at over here at Weeble's analyst. They have it as a underperforming, hold, and a buy, with their analyst saying it's currently trading at $17, and they have an average of $9 a share with a low $1.50 per share. I do think they're going to be profitable over the next couple years, but they have to get to that profitability. So recently, JP Morgan analyst Paul Castor has said that fuel cell stock is richly valued at current levels. Let me bring up their current levels right now. I mean, it's currently trading at $17 a share. I also agree with his analysis that fuel cell's strong backlog of projects is good, and the strengthened balance sheet, and expects a breakout contract. So this stock in the future, based upon the current economic political conditions, is going to be a great stock. And as soon as there's one contract that goes for billions of dollars, this is going to go kind of to the moon. Now that analyst cut his said it's underweight and it has a $10 price target. And I agree with his analysis. My price target is around $8 or $12 a share right now. And we all know that Joe Biden's administration has taken a friendlier stance towards alternative or green energy. And this will be positive for this stock, but not at this exact moment. And next week, the quarter four earnings report's going to come out. So we might see a bump in the stock price then. But my recommendation right now is not to purchase it. I have a sell recommendation on fuel cell, just for the fact that I think it's overvalued right now. And I would love to see the stock come back down to $5 to $10 or even $12 a share. I'd probably purchase into it if it gets down to $10 a share, because of the potential over the next couple years with the friendlier Joe Biden administration. So there you have it, folks. That is my recommendation, is a sell on this stock. I do love the company. I think without the Joe Biden administration, that this company kind of would have floundered over the next couple of years or just stayed steady. But with greener projects on the horizon, I do have a good outlook for this company in the future, just not at the $17 price point. So wait down till it gets around $10, purchase it. Or if you want to gamble, you can go gamble with it. But I'm not a gambling man with this company. I'm probably going to hold out till it's around $10 a share. So if you like this video, smash that like button down below, and I'll be with you in the next stock videos. Thanks.